Welcome to the WWBC Channel 4 News. You're joining me, Emmanuel Herrera, at 6 o'clock for breaking news. And this just in, McDonald's has continued the sale of McChicken hot and spicy sandwiches in addition to Shamrock Shakes, which were only sold exclusively prior to St. Patrick's Day. And if my reports are correct, I believe that Burger King will also continue the sale of Angry Whoppers, their most demanded Whopper since the Whopper's inception. This is just over the charts. I can't even explain it to you. In other news, a recent accounting scandal has been brought to the public eye. The government-sponsored enterprise of Freddie Mac, which was a federally backed mortgage financing giant, has been found to have intentionally misstated and understated earnings. And we have just, is that correct, Jim? Oh, okay. We have just uncovered video evidence of CEO Leland Bransell planning out fraudulent activities, which will be brought to you after the break.
Hello. Here at WWBC, we'd like to give thanks to our sponsors. We'd like to thank Steve Jobs of the amazing and spectacular products that he's offered for us. Here we have the MacBook Pro, which is used widely in our broadcasts. We also have the iPad 3. And lastly, we have the iPhone and the iPod. These tools help us make our broadcasts every day, and they make our job much easier. Thank you, and have a good one.
Welcome back, ladies and gentlemen. In a few moments, we will be showing you the fraudulent activities practiced and planned by CEO and CFO of Freddie Mac Enterprises. Now, this may be a little difficult to comprehend, so make sure you stay with me. In a few moments, we will be bringing you to this event. Hold on, folks, because it may be a bumpy ride. Freddie Mac cast aside accounting rules, internal controls, disclosure standards, and the public trust in the pursuit of steady earnings growth. We now bring you to this video evidence.
What's it called? Wiley Accounting Gap? I think it was. I don't really remember. The librarian didn't give me the card. It just gave me the cards.
But hey, maybe that app.
I think it's probably that app. Just check it.
My entire career may be at risk, but bringing these pertinent news to you is worth it.
This is real news. Oh my gosh. That was one of those news. I know. How are we gonna report our income for that? Accounting records. You see this? I know. Alright. No one's around. Right. We're not gonna use this one. Alright, let's go.
He just threw the book. I repeat, he just disgraced the accounting book.
I'm doing a little work, right? And if we understate by $5 billion, I think we can make the company a little more attractive.
Oh my gosh. You know what else we could do for that? For 2002? And we could smooth quarterly volatility in earnings. You know, meet Wall Street's expectations, you know?
Yeah, then we can get more investors off of Wall Street, those big money guys, to invest in our company.
Yes.
And you know what else? We can also get those big bonuses off of this.
I know. It's a win-win. Just gotta make sure we don't get caught.
Right. We gotta get the politicians on the side, like Gingrich and all that. Make sure they lobby for it and everything.
I hope so. Let's see what's gonna do.
Here we are back on Primetime News. I am Sherman Riggins, taking over for my partner, Manny Herrera. Manny, I'm receiving reports that he had to run out to Burger King to get an Angry Whopper, as they have now dropped the price down to $129. So run out and get your Angry Whopper, folks. Now, I hope you enjoyed the commercials. We are back now with more Freddie Mac details. We are receiving reports that their net income as a result of the scandal was $5.7 billion.
and Congress is now imposing sanctions on them, restricting the amount of mortgages that they are allowed to lend to homeowners. They're also instructed to pay fines of $125 million to ensure that they have no future misconduct, and some more consequences here that I'm receiving information now. Some consequences of their fraud are they misled capital investors on the amount of income the firm was receiving. Another consequence was they supplied corporate executives with incentives to engage in insider trading. So they basically knew about the insider trading and they allowed it to continue. And the third consequence is the market may misestimate the risk of the corporation, and in this case, that seems to provide the motivation for the counter fraud. So basically what happened there was the market adjusted to them earning a lot of money, but the money actually wasn't there. So people invested, but they invested in a company that was actually fraudulent.